In this market update, we're going to be talking about the stock market reaching new highs, but the U.S. stock market is not as healthy as other markets around the world. Hi, Jim Gore from THOR Wealth Management. Well, the stock market has reached new highs and people are getting excited. The question is this a very broad-based market rally? Well, one of the things we like to look at is the percentage of stocks that are above their 200-day moving average, basically up for the last year. And if you look at this, you look at the S&P 500, yes, the majority of them are, but it's a slight majority. It's 56%. You look at the New York Stock Exchange, it's actually 49%. And following up from my market update last 2 weeks ago, my last one that we did about small company stocks, only 38% of the companies are at new highs from a year ago. That is not a very broad-based market. So the question is, what do you really want to see when it's a broad-based market? Well, that's what this chart is showing here. This is looking at the NYSE, and I put a line there with an arrow. When the market is on a good upward movement, you usually see anywhere from 70 to 80% of the stocks are positive above their 200-day moving average. We're at 49%. And I kind of highlighted the section there at the end. You can see in 2004, we were above that. 2024, and last year, it went down, but we're nowhere near where we need to be in order to have a good, sustained market run. In other words, this is not broadly seen out there, the movement of the market. And that kind of where the areas I'm highlighting here, well, let's look at that on a weekly basis. So you look at the weekly movements, what I've highlighted there, when we were over 70 to 80, you can see a nice sustainable move in the stock market. We have the stock market up here, but it's only 49% that's up. Other thing is, notice we're kind of hitting a resistance here. We have two other points that the market, reached this point here where we are, this year and late last year. So this is some big resistance. And with the market, only 49% of companies being up over the last year, that is not a good, healthy market. So the question is, what is a good, healthy market? Well, we've been saying this for a while. One of the areas that we've overweighted in our clients' portfolio is in the international, especially emerging markets. And this is looking at the EAFE Index. As I mentioned before, you look at the NYSE, we were hitting resistance, even though the market is up. Notice where we are with the EAFE. EAFE is making new highs. So international stocks are doing well. This is a very good sustained momentum that continues to go up here. That is a very strong market, and we think it's going to continue. And then you look at the same thing with the emerging markets. The emerging markets have moved up. This breakout here is significantly higher highs, higher than we've seen in the emerging markets. So these are good markets to invest in. We are overweight, and we continue to be overweight in that segment of the market. And it really has been beneficial for our clients, especially this year with the US dollar down about 10%. If you have any questions or concerns, or if you need help with your portfolio, if you are just in U.S. large company stocks, this is a time you really need to, go ahead and diversify your portfolio. But you want to make sure you're in the right areas in the international market and emerging markets. And we can do that for you. Give us a call or reach out to us at wealthmanagement.com. We'd love to help you with your investments and make sure that your portfolio is set up for success in the future. Take care and have a great 2 weeks.
Subscribe to the THOR channel today.